Home affordability is the big topic today in the news in real estate. But how do you know how much of a home you can afford? Well, stay tuned. In this video, I'm going to show you an easy way to get an idea of what you can truly afford when you are purchasing a home. Remember, when you're looking at home, it's not about how much is the home selling for, it's how much is that monthly payment going to be, because that's going to determine truly what you qualify for. You need to be considering what your taxes, insurance, homeowners association dues are, and also what the interest rate is, because that's going to determine what your principal and interest payment is going to be. And don't worry, I got you covered on figuring what your taxes, insurance, principal, and interest is going to be. There's a link below that you can use my mortgage app. It just will give you an idea. You can calculate how much that monthly payment's going to be. There's probably a lot of apps that you can get out there, but this is an easy one for you to use. And no, I'm not going to be hitting you up to make sure that you are using me as your lender. Just use the app. It's free of charge, but it will help you determine what you can qualify for. Let's take a look at this example. Okay, so your monthly income in this example is going to be $6,000 a month. You want to take 45% of that, because that is just a typical guideline that you want to look at, that your total debts should not be more than 45% of your monthly income. And remember, when we're looking at monthly income, this is stable income that you're getting. This is a salary. This is your hourly wage. You may be able to use overtime and bonus income, but we have to make sure that it's been consistent over the last 1 to 2 years. When you take that 45%, you're going to get a total of $2,700 that can go towards your outstanding monthly debts. Your monthly debts may include a car payment of $400, a credit card of $50 a month, a student loan of $25 a month, and maybe even another credit card of $100 a month. When you add these up, this is part of that $2,700 that can go towards your debts. When I subtract these away, that means I have a total of $2,150 that can go towards your mortgage payment. And that mortgage payment has to include taxes, insurance, homeowners association dues, and mortgage insurance if you're putting less than 20% down. So again, that $2,150 is what you can be all in at as a mortgage payment. And if you're purchasing your first home and you are currently renting, you should be able to comfortably pay $2,150 right now before you ever look for a home. If you're only paying $1,500 in rent and you're not able to put the difference into a savings account consistently every single month, you are not ready to buy a home. Remember, that 45% is just an example. You may qualify for a little bit higher of a debt ratio, or you may qualify for a little bit lower of a debt ratio when you truly go to apply for a home, but this will give you an idea. And like I've always said, it's not how much that home is selling for, it's how much is that monthly payment going to be. You want to be able to own a home and feel comfortable in it. So making sure that that monthly payment is within your budget is the key to home ownership success. As always, if you have any questions about financing a home in today's market, especially if you're in Florida, please feel free to reach out to me. You can put a message in the chat box, or you can reach out to me directly. Home ownership is a great thing, but you want to make sure that you can afford that monthly payment. You can always refinance in the future when rates go down, but make sure that you are comfortable with that total payment at the current interest rate and currently what insurance is. Again, if you have any questions, please feel free to reach out. Happy house hunting.